Bitcoin just watched a piece of itself break away, run for 2 blocks, and stop. A contested upgrade called BIP 110 went live at a scheduled block on Saturday, and by Sunday its own chain had stalled. The proposal would limit non-financial data on Bitcoin for 1 year, and it has split developers over what the network's block space is actually for. It entered mandatory signaling with backing from under 3% of Bitcoin's mining power, a threshold that left it with almost no way to enforce itself. The enforcing branch produced 2 blocks and then went quiet, still stuck at Bitcoin's full mining difficulty, while the main network kept pulling ahead. Supporters are now sitting on a minority chain, while the rest of the network moves on without them, and the gap is widening. One developer warned that holders who sell coins from the fork could lose real Bitcoin in the process, and supporters are already discussing a hard fork as a fallback. In Brazil, moving your own crypto to your own wallet is about to come with a waiting period. The central bank has ordered exchanges to hold large transfers for as long as 24 hours before releasing them. The rule applies to transfers worth more than $10,000 when they are sent to a self-custody wallet or to a service provider based outside Brazil. It also covers other transactions that get flagged for review, and it applies to fiat-backed stablecoins as well as ordinary crypto. The central bank is framing the delay as a fraud control, arguing it needs a window to freeze stolen money before it reaches a wallet no one can claw it back from. The rules take effect on the 1st of January, 2027, which gives exchanges nearly 17 months to build the hold into their systems. For users, the final step of moving crypto off an exchange will stop being instant and start being a queue. $1 billion walked into Bitcoin funds this week, and one analyst thinks a hacked hardware wallet is the reason. U.S. spot Bitcoin ETFs took in $853 million in a single session, and BlackRock's iShares fund claimed the bulk of it. Across the week, Bitcoin funds pulled in about $1 billion, and adding Ether products takes the total to $1.1 billion. That makes it their strongest week since April, and their third strongest showing since October. It happened despite unusually low trading volume, which means the inflows were not being driven by a burst of market activity. Bloomberg analyst Eric Balchunas linked the run to the cold card wallet exploit, noting that several Bitcoin funds have taken in money every day since the hack became public. If he is right, a break-in that emptied self-custody wallets has pushed a wave of holders toward the one place where they do not hold their own keys. Subscribe now.